Today I'll be diving into the depths of day trading and sharing the top 5 tools that help me change my trading journey. But before we get into that, let's take the Ferrari and hit the gym to keep our mind sharp and our bodies fit. Finish up the session, and going to the gym should be a daily part of your routine as a full-time trader. It keeps us sharp in the markets. We're helping our body release the emotions it's built up. It's also important to remember it's not just about the numbers, it's also about enjoying the journey of becoming a full-time trader. We're now back in the office. Let's get on the computer and go over the top 5 indicators I use to transform my trading. So starting with the most important one of the 5, and that is going to be the 50 EMA. And EMA stands for exponential moving average. So it's just a flow in the average in what the charts are doing. And I use this as a good barrier, especially on the higher time frames like the 4-hour and the daily. Price will use that and normally reject both of them, so you can get your stop loss behind that, and notice another strong barrier price has to break. So we'll show you that now on the charts. So you can see here what we're looking for is this here. As you can see, the red zone, that if I double click that now, that would tell you it's the 50, so the length is 50, and that's 50 days of current price flowing, or depending if you're on the 4-hour or if you're on the hour, it all goes in 50s. And my source is closed, offset is 0, type is none, length is 14, and then chart is on time frame for the chart. So you can obviously select everything, but obviously as I drop through the charts, you'll see it change. So you can see I mark them here as well. So when I'm going through time frames and doing my analysis, I can see where it is in the higher time frame. So like now, if we drop down to the 4-hour 50, so now this is on the 4-hour time frame and the 50 EMA. So you can see what I'm looking for. I'm waiting for price to pull back into that like it did here. You can see price pushed up, and then it pulled back into this here for a double zone, and then pushed all the way back up. So I'm looking for price to pull back into that and have that as a barrier. Where you find that is if you go up here, it says indicators on your TradingView chart. Click on that. I've got it set, but you can type it in moving average exponential, or just moving average, or exponential moving average, whatever way you want to type it in. It will bring it up. Double click on that, and you will find that over here where your little drop down menu is. Your chart might look slightly different to mine because I've customized mine to my liking. So I have stuff that I use, and I take away stuff I don't use, and I get rid of all the lines and charts just to give me a nice, clean, simple chart for trading. I don't like too much stuff going on. So that's number 1. Number 2 is the green 15 EMA. And what I use that for is price on the bigger runs will pull back to that in smaller waves. So you can use that for getting your stop loss to entry, or if you're going to get another scaling on a trade you're already in and you want to get another entry, that's a very good sign of where price is going to pull back in the kind of run before you get the bigger pushes. So as you can see that clearly here on Euro USD on the 4-hour time frame. Price pulled back to the 4-hour here, and then it pushed all the way up and had a little pullback into that green 15 EMA there, and then pushed all the way back up. So you could have put stop loss to entry if you had a trade on here, or you could have easily had a second entry on that. So that's what we're looking for on them two. Number 3 is going to be the rectangle, and I use the rectangle for plotting out my necklines on like double tops, inverted head and shoulders, triple tops, flag patterns. You use that all the time in all of my charts, so I'll go through that now and show you on every chart I've got. That is going to be on there, and as you can see, as we're still on Euro USD, you can see I've clearly marked the neckline of this inverted head and shoulders, and I use that all the time. And this again is located not up top, but on the left hand side of your TradingView screen. So if you come down to here, you've got the little pen was always there. Come right the way down, and that's your rectangle there. You can customise this to any colour or any style you like. I just like to have it grey, but just slightly light, and have it so that I can still see the candles through it, so it's transparent instead of having it a solid block. But you can use that for marking zones like I would here. You can mark a zone like that to come back in, because what you got to think about when you're looking at plotting weekly zone, daily zones, necklines, they're a big area. They're not just a single line. So price will never come just to one single line and then shoot off. It's going to be in a bit of a width area. As you can see here, I've got this weekly 50 marked here, which is now support, which would have been resistance. But you can see over here, price just touched it here, but then it also broke through it up higher here. So it is a zone, and it's more marked like this, like that, than actually it being a little dead straight zone. So I only mark it in the zones for me. Keeps my charts cleaner and I can see the candles better. But I know from previous experience and just having time in the markets that it's a zone and not a perfect line. So always think about that when trading. Put my neckline back quickly. I was going to ruin my analysis for when I come back tomorrow. Number 4 is going to be Fibonacci retracement, and this I use for once I've got my structure in and I'm looking for price to pull back into that 4-hour 50 EMA. I use that, and we want a minimum of 382 fib. It just tells me that price has pulled back enough that I now can enter the trade, because sometimes it doesn't pull back enough but you think it has. You enter the trade and price then carries on pulling back a little bit further, taking you out of the trade and then going in the direction you want. So this really helps on not getting taken out of trades and then price still going the way you want it to. So this is located the second one down. You can see it with the little lines here. But if we click on this, it's the very first one. It's called Fibonacci retracement, or fib. I have customised mine. Normally they come with colours. Again, I like it nice and simple, and it's just grey. So we would use this if this was a setup that we look to place. This is the neckline, and I'd look to see if prices pull back enough. We come all the way right up the top. So you go to the furthest bullish or bearish. So this moment we're looking for bullish. So that first green candle is where I'm going to come from. And as you can see, price pull back to the 382 fib here. So that is perfect setup. If price wanted to pull back a little bit further into the 50, even better. But anything 618 is max I want to be. If price gets to 718, which you can see here, that means price is pulling back way too far, or it's even now reversed in the direction you thought it was going to go, and it's now going to go from bullish to bearish or bearish to bullish. So be careful of that. About 50% is perfect. 382 fib I will take. If it doesn't hit 382 fib, I'm not placing the trade. Even if it's pulled back to the 4-hour 50, it won't happen. So if we pull that up again now, from this point we go right from there, pull that up into there. You can see if price pulls back, it can just break my 382, or if it pulls back through that EMA, it may even hit 50% fib, and that'll be perfect for a setup. So it just gives you the double confidence that prices pull back where you want it to. And then finally, the big one, and this is really going to be really good for working out your ratios in trading, and again how much you're risking, and doing the correct lot sizes for what trade you've placed. So, and that has already been on the screen the whole time. And some of you won't use this, and some of you may have already seen this previously. And that is the long and the short calculator. You can just bring that up, and that you can plot that out and work out where you want your trade to be before you even place in the trade. So I use that over here. That again is this one here. You can see it's predictions, and it's the first two there, long and short. So obviously if you're taking a long trade, you want the long. If you're going for a short, so long is obviously a buy and short is a sell. So the terminologies in the Forex market is what comes up on your trading view. So we can click long like I had up here. I'm looking price to pull back to the 4-hour 50. Obviously I'm not going to enter price bang on that 4-hour 50. Price is going to have to reject that. So we're going to be a little bit above the 4-hour 50. I need to see that rejection before placing a trade. So I'll set that out now. And that's going to be like that. So currently it's given me nearly 200 pips stop loss and take profit. As a 1-to-1, we don't want that, and 200 pips is absolutely massive. I don't think I've ever placed a 200 pip stop loss. So this then help you calculate your risk to reward ratio, how much you're trying to gain back for the investment you're putting in. So for me, if I've got a £100,000 trading account and I'm risking 1%, which is £1,000 on every trade I enter, I want to gain like 3%, 4%, 5% back. So this helps me calculate that, and then I know where I need to put my stop loss and my take profit for me and for everyone else in the Limitless Trading Club when I add the trades into them. So we're going to look at this. If we say we're going to enter, where are we at there now? That's 1630. We can go up, probably be at 1650. Is where we're going to enter the trade to be spot on there. Stop loss, that's still way too big for me, so I just want to be behind the 4 hour 50. So I would look for this trade for Euro USD. It's probably going to be about a 40 to 50 pip. It's quite a fast mover. If we said we're going to go 40 pips as a stop loss, and then we're going to look to try and gain what we're going back. So quite easily, I can just gain over a 1 to 3 there. I wouldn't want to be right on that zone on the weekly resistance zone there, because if price rejects that early, it might not hit your take profit by 1 or 2 pips and then reverse. So yeah, don't be too tight to where the area you want to smash through your TP, not bumble around right by the edge of your TP. So I would look to go for a 1 to 3.1, and I do the extra little 1 there, or 11 it's coming up as, just to then cover the costs on spread for the broker's commission. So that's what I'll be looking for a trade. If you're obviously looking for a short trade, let's go to AD CAD. Have we got a short trade on AD CAD? We have indeed. So you can see, again, I've got everything marked out here. Both EMAs are on this, and also the... Sorry guys, I've got a bit of a sore throat coming along. Also got the rectangle there for my neckline, and we can go short trade on this one. So pick short position. You can see we're looking for price to break through both of the EMAs and then retest. So I can plot that out here. It's gone absolutely massive again. It's gone even bigger this time. So I would want to have that above that. 80 CAD, a really slow mover. So as you get better at trading, you understand what the movement is of each pair and how big of a stop loss you will need on each different pair. So like 80 CAD, I'm happy to get in with a 15, 20, 25 pip stop loss, where with Euro USD, I'm more of a 40 to 50 pip because it's such a faster mover. So this one, I'll probably get in with a 20 pip stop, nice and tight, beautiful. And then I'll just trade down to that zone, and that'll be like a nice little 1 to 4 there. 1 to 4.1, easy, you can set that up. And then we can also then see, when we're looking to put the trade into our trading view, when we put our trade into MT4 or MT5, you can then clearly see here where your entry point is 8894, and then your stop loss is going to be 8814, so that's going to give you the 20 pips different between where you enter and where your stop loss needs to be, and then also clearly where your TP needs to be set as well. So they really help on working your risk to reward ratio, because it calculates it for you. You know you're getting a 1 to 4 back on that trade, and then it also really helps you on where your stop loss and TP prices are for calculating that, for adding it into your actual trade. So yeah, they're my top 5 that I use. So recap is 50 EMA, that's a really strong barrier. The green 15 EMA, I'll mark them as green. That gives you an indicator when price has done a little mini pullback, and that's really good for second entries or for putting stop loss to entry once the trade is in profit, so your trade is then risk free. Then number 3 is the rectangle box that I use for marking out zones, as well as necklines for structures like double tops and head and shoulders. Then number 4 is going to be the Fibonacci retracement, which then gives us the correct amount of pullback for price, so we don't get taken out of loads of trades. And then finally is the lot size positioner, so you know exactly where stuff is and what your risk to reward ratio is on every trade you place. So thank you very much for watching. I hope everyone's having a good part to their trading journey, no matter whether if you're a beginner or if you're more of an experienced trader. I'm trying to do a video, or I do a video every single week on all topics around day trading and Forex trading. So head over to the Limitless Trading Club YouTube channel, and I hope you see you there.